Hi students, I am Professor Malik and I am into teaching of accounts for last 20 years. I am very much closely associated with board and university. Now as you know, the HSC, ISC and CBSE, whatever board it might be, everybody will be having their 12th standard exam on usual time, maybe next year if everything goes well. But we cannot stop studying, so I thought to help you out in this hour of need. Now whether any kind of board you say, partnership is a must for your accountancy. Now as you know everybody, there are 5 forms of business. One is sole trading, then partnership, then joint stock company, cooperative and joint Hindu family. Now in case of sole trading concern, a single trader does everything for himself. He brings the capital for himself and he shares the profit by himself, and everything is done by his own. But as he works harder and harder, he might require more and more capital. And as the requirement of capital increases, he himself cannot afford to bring the capital for his own. So in that case, he just fetches the capital from his friends and relatives. Now the question is, why the friend and relative will help him? In turn, he says that he will share the profits of his business with his friends and relatives, and vice versa. If there is a loss, they have to as well share the losses incurred by the business. Now with this, the partnership starts. Now the thing is, if a person, Mr. A, does a partnership business, now this partnership business, if he is going to do a partnership business, he might join hands with 2 of his friends, B and C. Now this contribution made by B, because when they join the business, they have to bring capital for that is the basic requirement why he is calling for a friend or relative, because he needs more capital. Now when he calls for the Mr. B and Mr. C into his business, obviously B will bring some money and C will also bring some money. Now when they bring the money into the business, the amount of the money brought by B and C may not be equal. It may be different. B may bring 2 lakh rupees and C may bring 4 lakh rupees. So depending on the capital bought in by B and C, the share of profits will also differ. Definitely B has bought whatever the share of money B has bought, he will get the profit as per that ratio, and whatever the money C has bought, C will get the money in that ratio. Now in this way, the profit sharing ratio of B and C will be different. Now how to keep a track of it? For that, they need to make an agreement where everything will be written carefully and clearly, how much profit will be shared by B and how much profit will be shared by C. So accordingly, they will just follow that procedure. This agreement is a legal agreement where they keep everything in a legal form. This is what is known as partnership agreement. Now see, whenever there is a need for more capital, we call for admission of new partners, and on the basis of this, there is a total full chapter which is known as admission of partnership. Now the thing is, a time may come when these people, these partners, may leave the business for some reason. The reasons may be varied. maybe some they can become insolvent. Insolvency, what is insolvency? Is insolvency means when the partners are unable, they have become indebted, they don't have money. So in that case, insolvency can be one of the reason for leaving the business. There can be lunacy. Lunacy means the person has become of insane mind, he cannot walk anymore, the person might fall ill, and there could be many other reasons. Maybe there could be some breach of trust, there could be some misunderstanding between the partners, for which one partner may leave the business. When the partners leave the business, we call it the retirement of the partner. Suppose A, B, C, there were three partners working together. B is now leaving out of the business. So the second chapter which we will cover is retirement of partnership. And the third, yet another, there is leaving from the business, but this is not by will but by force. For example, if somebody dies, so his name has to be removed from the business in any case, because the person is no more in this world, so he cannot continue to be in the business. So that is what is known as death of the partner. In case of death of the partners, whatever settlement of account take place, it has to be given to the legal heir of the partner, not to the partner himself, because the partner is no more into the business. So the three forms of this change of partnership, as I have told you, one is admission, when the partners are admitted. Number two, when the partners are going out of the business, that is retirement. And when the partner dies, so that is one is death of the partner, that is death of the partner in business. Okay, now all these three are having separate chapters. All these are having separate chapters together. So admission we have to deal separately, and we have to deal with retirement separately, and we have to deal with death separately. Every time whenever a new partner comes, whenever a partner leaves the business, or whenever a partner dies, there will be the change of the agreement. Which agreement? That partnership did, because the profit sharing ratio will not remain the same. Okay, so that is why this entire thing is coming under the head, the reconstitution of partnership. Whether a partner comes into the business, there is a change in the profit sharing ratio, so there is a reconstitution, means changing of the entire thing. The partnership firm should have a new structure of profit sharing ratio and everything. So admission, there is a different entirely different forms of profit sharing ratio and everything. Whenever a partner dies, then also the agreement changes. Whenever some partner dies, then also the partnership changes, that did changes. And yet there is yet another form of this reconstitution of partnership which is totally different, that is dissolution of partnership. Now what is dissolution of partnership? In case of dissolution of partnership, the entire firm closes down. Okay, the firm does not carry on anymore, the firm gets closed. Okay, and the partners, all the partners take away the assets, liabilities, whatever profits and everything. That is the end of the firm itself. Okay, in the other forms of business, like for example admission, the partner comes, the person who comes in, he will come in, and there will be a fresh agreement, and the firm will continue. Okay, in case of retirement, one partner goes out. Okay, with the remaining partners, the firm will continue. In case of death, a person dies, with the remaining partners, the firm will continue. But in the dissolution, the firm itself closes down. Okay, and the partners are no more there, because there is an end of that partnership business. Okay, so these four we have to take into account separately. Okay, whether it is admission, whether it is retirement, whether it is death, or whether it is dissolution. Now in your syllabus, these three topics, that is admission, death, dissolution, in your for your I will cover up both HSC, CBSE, ICSE, everything. So in these three chapters you have to do all together, all the three very carefully in your board exam for CBSE and ICSE. For HSC, out of death, dissolution and admission, out of these three, any two questions will be coming, not three, but we will cover all the three because we never know which two are going to come. And dissolution, we have to do it separately altogether because it is a separate question. It will come separately, not in OR form. Maybe it can come with the OR form with the company accounts for HSC students. So in that way. So in case of admission, we will take up in our next lecture, we will be starting with what the admission of partnership firm is. So till then, goodbye students, and wish you a good health. Bye bye.